Hello friends, welcome to Kavita's Classroom. Today we are going to talk about a concept of dead weight loss. It has everything to do with the understanding that perfect market structure is the ideal format. Why is it ideal? Because it gives you the maximum quantity on a minimum price. But as and when in this perfect market competition, there is intervention by the government in form of taxation or price ceiling, price floor, or any other sort of intervention, that perfection is disturbed. It means the society bears a cost, and that cost is called dead weight loss. So let's understand what do we mean by this term, dead weight loss, and the related calculations for the same. In this diagram, we see that the demand curve is sloping down, supply curve is moving up, determining the equilibrium at this point, price at 1.5 and quantity at 20. So if we are not talking about just for a moment this supply with tax, so what is going to be the consumer surplus in case of a perfect market? This is this diagram. This whole area is the consumer surplus for a perfect market situation, because this gap shows the benefit going to the consumer because he is willing to pay this much, but he is actually paying the price P, which is determined by the forces of demand and supply. And this area below this consumer equilibrium, this triangular area, is producer surplus. Means producer was in a position to produce this at this prices, but he is getting this price. So this is the benefit which is given by the perfect market situation to the consumers and the producers. Now let's understand what happens to this consumer and producers surplus in case of incidence of some taxation. Because of the imposition of tax, the supply curve shifts from S to S dash. This is right leftward shifting. Right. Because of this, the new equilibrium is determined at E dash, new price is at P dash, which is higher than the previous one, and new quantity is at Q dash, which is lower than the previous one. The situation now in the market is the less quantity is traded at more price. So what about consumer surplus in this case? What is the amount of consumer surplus which is there shown in the picture? So this is consumer surplus, this triangle, as it is showcasing the gap between what he is actually paying and what he could have paid. So the price determined, new prices are 2 and he could have paid 2.5 also. So this triangular gap is consumer surplus after imposition of tax. So what is it now? Let's calculate. So what's the area of a triangle? Half into base into altitude. So half, base is 0.5, and what is the height? Height is 10. So what does it give you? It gives you 2.5. So this is consumer surplus after the taxation. And what had been the consumer surplus before taxation? Let's just check it out before also. So before that, the consumer surplus was this whole area. Okay, I'll just show it to you. Before this taxation, the consumer surplus was this, right? So this whole was consumer surplus. So what is the calculation of this area? Consumer surplus before the imposition of tax was half base altitude, and this is half. What is the base here? 1 instead of 0.5. And what is the altitude? That's equal to 20 units. So the consumer surplus was 10 units before the imposition of tax, which has now reduced to 2.5. Okay, let's talk about the producer surplus now. What is the producer surplus before the imposition of tax? That is this whole area, right? So the calculation of producer surplus before taxation is again half. Base is 0.5 to 1.5, that is 1, and the altitude is 20. So that again comes out to be 10. Right? And after this imposition of taxation, let us check what is the producer surplus. Now, please see, Producer surplus has been reduced to only this triangle. Why so? Because here, this much is the amount of taxation. The vertical shaded area shows you the tax paid, right? So what money goes to the producer and what is the surplus thereof? The surplus is shown by this small triangle and the calculation is half, 0.5 and 10 again. That gives you 2.5. So if you try to have a contrast of what was the consumer surplus before and after, before it was 10 and after imposition of tax it was 2.5. See the huge difference, right? So, but the point is there is some quantum of tax which goes to government. So that also is a sort of surplus going to some section, that is the government, right? So what goes to government? Government gets to have the tax amount, and tax is how much here? So the length into breadth gives you 1 into 10 because it is a rectangle. So this is 10, right? So I have the total of 2.5, 2.5 and 10. So what about this makes a total of 15 and this makes a total of 20. So what is the remaining 5? Remaining 5 is this red triangle. See, I'll try to show you here. This remaining 5 is this area and this is red triangle. And what is this? This is nothing but dead weight loss. So dead weight loss in this case is 5. How do we calculate it? Though it's very much clear that the difference is on account of dead weight loss, but let's go for the calculations also. So here again it is a triangle, and what is the area of a triangle? Area of a triangle is half into base into altitude. So the altitude here is 20 and base here again is 1. So that gives you, no, I'm mistaken somewhere, 1 to 2. That base is 1 and altitude is 10. So that is half base altitude. Yeah, this is 10, right? So that gives you 5. So this is a clear expression that 5 is the dead weight loss here. Now if you check the situation after tax and before tax, you are very much able to understand that before taxation, the total surplus was 20, but after taxation, the consumers are getting 2.5, producers are getting 2.5, government is getting 2.5. It means the total surplus going to some or the other section of the society is 15, but there is some untapped unreaped benefit, that is 5, and that is called the dead weight loss. Why has this dead weight loss arisen? Why? Because we have restricted our quantity to Q dash, which is lesser than Q, the equilibrium quantity. Had we produced the quantity till Q, we could have enhanced the surplus of some or the other section of society. That's why we always say that as and when there is some intervention by the government in form of taxation, it results into inefficiency of the market, because here the total surplus of the market is getting reduced. So in the next video, we'll talk about what other cases are there which result into the inefficiency and dead weight loss. Till then, see ya. Bye-bye.